Morning, it's Harvey Jackson. Just gonna go through seasonality and how a lot of times it's cyclic, but it's or cyclic, and it's not always a true indicator. But it's one of those things that you need to pay attention to as a producer, especially with canola and red spring wheat in Western Canada. I'll show some other seasonality charts as well. So let's get at it here. So first off, canola. What I want to point out is where are we right now? We're in this range here, let's say, and that's what it appears to be doing. If we looked at this chart and overlaid this year's canola chart on here, you would actually see a lot of following some of these longer term kind of trends. So just understand where we are. This year does seem to be following the historical pattern. Here's Minneapolis wheat, and this is data that I got supplied to me from another source. But of course, if we look at what's going on here too, and you look at back at our chart, and Minneapolis wheat is actually following this cycle pretty close as well. So good thing there. Here's your oats, and what I want to point out is where we are right now, and we've actually seen this kind of an increase right now. But here's your oat chart that where you don't see it at the same kind of timeline. Like you get to see a rally going into the into later on in the year as well, so into the winter months. So I don't know if we'll hold and continue to move that kind of direction or flat with the current futures value on oats, but it's just interesting that these charts do show some of this movement. Soybeans chart that I've got, and I thought maybe I had a better one, but you do see this pullback, in that September October timeline, and then a recovery. And if you look at this, there is a recovery going into your May, June, July basic move up in there, not huge, but and I think some of the differences that we see in the last few years is the size of the South America crop affecting the soybean seasonal for the northern hemisphere. So the southern hemisphere is kind of muting this market because their supply is coming on the market in this timeline, and it's not the market rise isn't as great. Where you look at the South America or southern hemisphere market on the canola, it's basically just Australia, and then the bigger players being Europe and European rapeseed and the Canadian canola affecting the canola market seasonality and making it a little bit more prevalent. So here's your corn. You see this drop off since May and a bit of recovery. That's pretty close to what we're seeing today. Not to say that we're going to continue to follow that, but you see this after this expiry, markets do tend to go a little bit higher when there's uncertainty about how much is getting planted, whether the weather's good, and all that other stuff. So we could actually look at these seasonal charts as when is the market is more certain when there's supply, and less certain when there is less supply as you run out, and when is the selling happening. Selling is happening here, and less selling there, but that drives the market up. Simple chart economics. So all the oxygen in the room with all the media is all talking about the hurricane hitting the Florida area, and I know it's going to do a lot of damage, and you can see here, the large amounts of rainfall that's going to hit there, but then it's the storm surges and everything else that's going to cause problems. But what you can see is the major corn soybean growing area really don't have a whole lot of moisture in it. I know there's a little bit of harvest still happening in Manitoba for corn and a little wee bit of soybeans, but that's really moving along pretty quick. So if we look at the temperature anomalies, it looks like some of the drier areas is in North America is going to continue to be warm, and it's probably going to keep harvest and everything moving along. So this is just a gradient of temperature from normal. So when you're close to white, you're actually in the normal. Blue is lower, and red is higher than normal. Moisture, here's a 10-day, and it's starting to show a fair bit of moisture getting into the key growing areas in Brazil. But you can see that there's still some deficits over here in the Russia, Ukraine area, and if there's planting for red winter, it's happening over there as well. So drought, adding rain, deficit of rain. So whether that's going to impact the wheat market, but this is impacting soybeans, and this is impacting planting of red winter. And and the same thing impacting planting of red winter wheat or your winter cereals slash even winter canola. So 1 week GFS is starting to add in like inches of rainfall in here, and the 2 week is even more. You're getting into up to you call it 6 to 12 inches depending on locality, and again the longer range forecast is probably going to have some lots of faults in it. Oilseeds. So I was talking to an analyst, and we're talking about wave analysis, and it uses 50% retracement, and just looking at canola and how that actually worked out. So you got this larger move going down to your 50% retracement, but this 50% retracement on the short move measured on the way down for retracement is at the 23.6. So will we get support here, and then I can shift this curve to possibly there? That would be an okay thing, because we do see that even happen there. We have longer tails. We just changed the steepness of the curve because we've had a lot of green days in here. Are we going to be done? I don't know, but just trying to put some optimism in here as well. But when we look at some of the complexes, Chinese rapeseed still gained the most in the last 6 months. Palm oil right next to it. Euro is only at a fraction of percentages, and same with canola. Soybean oil has actually had a deficit, or has gone down in the last 6 months, but the trend is all in this direction so far. Here's your rapeseed. It actually maintained and held this upward trend. Did fall back from the 61.8 retracement value. And what does that look like in relative value from corn, or from the canola priced in Canada? So we got canola priced in Canada against the European rapeseed in Canadian dollars at 111. So should shift this line a little wee bit, but it's actually above the $100 differential again. So what does that look like on the soybean oil? We broke that trend, and I tried to do the exact same thing with the wave analysis, and it actually breached the wave analysis 50%. But if we're measuring it, we need to probably get above this 23.6 on this short-term move, and we can shift this curve over again if there's some support there. We did have a pullback on palm oil as well, but this curve is still pretty steep here. It has not really broke that trend. Crude oil, if we're looking at a channel, it's it's still within that channel, but it did exactly the same kind of thing that we're talking about with canola. We longer term trend went to the 50%, and now we're trading at the 38.2 retracement value of that move. Here's your soybeans. Broke through the channel, broke through the shorter term retracement value of the 20 day as well. So it's been quite a few days of moving in that direction. Wheat, a better story here. If we can actually continue to hold above the 100-day moving average and above the 38.2 retracement value, and move in that direction, that would be well supported, and you can look at what's going on there. It's well in the trend, and need to get above some of those shorter term moving averages. And you can see Chicago wheat actually remained in that trend as well, and trading in a good channel. Now, if we can continue to hold, we probably have to beat this value as well, where we actually had it twice. So we have to get above the 620 on the Chicago wheat, and we will be making a higher high. So look to probably get into the 61.8 if we can actually start doing that. Here's your hard red winter, not trading at the 38.2 retracement, but currently trading above the 100-day moving average. And the same thing with the milling wheat, currently trading above the 38.2 and the 100-day moving average as well. Here's corn. 100-day moving average seems to be putting a lid on it for quite a few days in a row, or 4 days in a row here now, but still trading in channel, and need to get above that 38.2 retracement value. The only thing of significance that's coming up here is our report on October 11th. So we've got a couple of days, and we'll be chatting about what's going on in the USDA report, and there'll be adjustments of numbers there for sure. And that's all I have for you today.